Namaste and welcome back to the channel. If you have been following silver prices this February, you already know this month has been nothing short of a roller coaster. We are talking about a metal that touched our 4.10 lakh per kilogram in late January, then crashed all the way down, then clawed back. So today we're going to sit down, look at the charts, look at the city rates, and just understand what is actually happening with silver right now. This is purely educational. We are observing the market together, not telling you what to do with your money. Let's start with the big picture of February 2026. On February 1st, silver in India was sitting at Rs 350 lakh per kilogram. This was after a brutal single-day crash of roughly 45,000 per kilo. The reason? Profit booking after a massive January rally, a hawkish signal around US Fed policy, and general nervousness ahead of the union budget. Then through the first 2 weeks of February, the selling just did not stop. By February 16th, silver had fallen to around Rs 2.68 lakh per kilogram, a drop of nearly 21% from the February 1st level. That is enormous. Some market observers described it as one of the steepest monthly corrections in recent memory. But here is where things get interesting. From around February 18 onwards, silver started recovering. By February 22, it was back near Rs 2.75 lakh. By February 23, it had surged to Rs 3.0 lakh. By February 27th and 28, it was consolidating near Rs 2.85 lakh. As of early March 2026, silver is trading around Rs 2.95 lakh per kilogram nationally. So what we have seen in February is essentially a full cycle. Sharp crash, sharp bounce, and now a period of stabilization. Now let us talk about what technicians and market observers are watching. The support and resistance zone of Rs 2.85 lakh to Rs 3.15 lakh per kilogram. This range has become very significant. The Rs 2.85 lakh level has repeatedly acted as a floor. Every time silver dipped toward this level in the second half of February, buyers came in. On the upside, Rs 3.0 to Rs 3.15 lakh is where sellers have been active. Observers note that if silver can sustain above Rs 3.0 lakh, the next reference point becomes the February high near Rs 3.50 lakh. And if it breaks below Rs 2.85 lakh, the mid-February low of Rs 2.55 lakh would come back into focus. Understanding these zones helps you see why the market is in a tug-of-war right now. What is driving the volatility? Two big themes. First, geopolitical tension. In late February, escalation in the Middle East triggered a fresh wave of safe haven buying across gold and silver both. Second, industrial demand. Silver is not just a precious metal, it is an industrial one. Solar panels, electric vehicles, 5G infrastructure, semiconductors, all of these consume silver. This structural demand story is what many long-term observers point to as a floor for prices, even during periods of financial market weakness. Now, the part many of you have been waiting for, city-wise rates as of late February into early March 2026. In Delhi, Mumbai, Kolkata, and Bangalore, silver is broadly trading at around Rs 2.95 lakh per kilogram. Chennai and Hyderabad have been running at a slight premium with rates closer to Rs 3.0 to Rs 3.15 lakh per kilogram. This is consistent with the pattern we see where southern cities tend to price silver a little higher due to regional demand and tax structures. Jaipur, Pune, Ahmedabad, and Vadodara are broadly in line with Delhi rates. If you are looking at 10-gram rates for smaller purchases, you are looking at approximately Rs 2,950 in Delhi and Mumbai, and around Rs $3,000 to Rs 3,150 in Chennai. These rates exclude GST, so always factor that in when you are making a purchase. Now let us spend a few minutes on the investment format question, silver ETFs versus physical silver, because this comes up constantly in the comments. This is just an observational breakdown of the two approaches. Physical silver, coins, bars, utensils, gives you direct ownership of the asset. You can see it, hold it, and store it. However, it comes with costs, making charges, storage, GST at 3%, and the bid-ask spread when you buy or sell from a dealer. It is also not the easiest to liquidate quickly. Silver ETFs, on the other hand, are traded on the exchange just like shares. The expense ratio is typically very low. There is no GST on ETF purchases, and liquidity is generally much better. A systematic investment plan, or SIP, in a silver ETF allows someone to participate in silver prices without needing to think about storage at all. The minimum amount for many silver ETF SIPs can be as low as Rs $500 per month, which makes it accessible to a very wide audience. The key thing observers often note is that ETF prices closely track MCX silver prices minus the expense ratio, so the price exposure is similar to physical. The trade-off is simply that you own units in a fund, not the metal itself. There is also digital silver available through platforms like Augment and MMTC PAMP, which allows purchases of even 1 gram at a time. This sits somewhere between the two. You get direct silver ownership in a vault, but without the hassle of physical storage at home. For someone looking at building a position in silver over time, market observers generally note that SIPs help average out the kind of volatility we saw in February. When you put in a fixed amount every month, a Rs 2.68 lakh month and a Rs 350 lakh month both become part of your average cost. That kind of rupee cost averaging is worth understanding, not as advice, but as a mechanical concept. So to summarize what we observed this February, a dramatic peak to trough correction of over 30% from the all-time high, followed by a meaningful recovery and consolidation in the Rs 2.85 to Rs 315 lakh band. City rates show regional premiums in southern India. Silver ETF SIPs and physical purchases both have distinct trade-offs that are worth understanding before committing. And the structural industrial demand story continues to be a factor that market observers watch closely. That is it for today's deep dive. Before you go, I want to run a quick poll, and your answers genuinely help us understand what content to make next. At current silver prices around 0.95 lakh kili, which approach interests you most? Drop your vote in the comments and tell us your city too. Let's see which cities are bullish and which are waiting. If you found this educational, please like the video, share it with someone who follows silver, and subscribe so you do not miss our next breakdown. See you in the next one. Disclaimer, this video is purely educational and observational in nature. Nothing discussed here constitutes financial advice. Please consult a qualified financial advisor before making any investment decisions.